Hi, Phil Silberman with the Silberman Law Firm here today. We are talking about LLC operating agreements. So we just did a video on the certificate of formation, which is the document that's filed by the Secretary of State. This is the operating agreement for an LLC. It's effectively equivalent to bylaws of a corporation. So we're going to go ahead and dig into what's in a typical operating agreement for a Texas LLC. We have the basic heading of the document, ABC LLC, have the effective date or the date the operating agreement was executed, the date that it's effective, and the people who sign it are the members of the agreement. Then you have a definition section. Like all legal documents, you kind of get a long laundry list of definitions, and as these become important as you're reading the document, so you can scroll through there and see all the typical definitions that an operating agreement might have. So we'll keep moving along through the definition section. And then we get into the Article 2, which is the organization. Company's been organized as a Texas limited liability company. The certificate of formation was filed with the Secretary of State, the name of the company, registered office and registered agent. That was originally designated in the certificate of formation. Remember, that can be either a company or an individual has to maintain an office in the state of Texas. And it's the primary purpose of the registered agent is for receiving service of a lawsuit or junk mail to the company. You get a lot of junk mail if you're a registered agent. Sometimes an attorney can be a registered agent. Sometimes a service that charges $100 a year can be a registered agent. Members can be registered agent. Managers can be a registered agent. So different options for registered agents there. Principal office lists the principal office of the company. Purpose. This is very important. You want to describe the purpose in detail for what you're doing. You can have this general purpose for any lawful act in the state of Texas. I actually don't like those. I like to be specific with the purpose of the company, especially if you have multiple members of an LLC. If you have one member, maybe it's not so important, but specific purposes are important because you don't want to get the members crossways with each other on what the company's going to be doing, and what, if a member goes to start a new company and competes, then that could open up liability for that member. Other basic terms in Article 2, and then Article 3 we get into membership. This operating agreement is being done as a member managed LLC. Remember, there are two options for LLCs in Texas: manager managed and member managed. Manager managed is basically where the managers are sort of like the board of directors of a corporation. Managers don't always need to be owners of the LLC. In this case, this is member managed, a member managed LLC, and the members are listed in Exhibit A that we'll get to in a second. Additional members can be added to the LLC by a super majority. This gets important because members are sort of like the shareholders of a corporation, and the more members you have, the more your ownership can be diluted. So you want to be, if you're going into an LLC agreement with other members, you want to know what's the process for adding additional members, because your ownership could be diluted. So that's a very important section. More information about members, member rights, withdrawal, things like that. Then we get into Article 4, capital contributions. Usually members make an initial contribution. That could be cash, it could be property. Then we get into capital accounts. And with capital accounts, it's really envisions a partnership situation where the partnership is filing a 1065, and as part of a schedule, a K1, you'll see the capital account balance maintained there as part of the return, and that's also maintained on the books of the partnership. So remember, LLCs are, if they have multiple members, they default to a partnership for tax purposes. If it just has a single member, it defaults to a disregarded entity, which just means that the income drops to the Schedule C on a 1040 if it's an individual member. You can make some additional tax elections there. Article 5 is allocations and distributions. Allocations, again, are talking about tax allocations, which are, the default is in accordance with the percentage interest. So if you own 50% of the LLC, you're going to get the allocation for 50% of the taxes under this operating agreement. And then you have distributions. Distributions are very important because that's how the members get paid. I mean, members can be an employee and earn a salary for certain, but you have different kinds of distributions, or you have profit distributions usually. And this is the process for how those distributions are determined. It's very easy in a single member LLC, the members decides, but if you have multiple members, you may have one member who doesn't want to make distributions, and because that member wants to keep cash and invest in the business, and you've got maybe another member that needs the money. So it's very important that you understand how your distributions are made. Management, again, this is a member managed LLC. You can have manager managed as well, but this is member managed, a member managed LLC. And this tells you certain things that the members can do and can't do, restrictions of the members. One of the things that members can't do without the appropriate votes and authority is you can't enter into a fundamental business transaction. What's a fundamental business transaction? That's defined by the Texas Business Organizations Code. It's usually things like mergers and acquisitions, really big decisions that can't be done by just sort of one member without the appropriate consents in place. Again, not a big deal if you're a single member. You have multiple member LLCs, then it becomes a bigger deal because you may have members that have different ideas about what's going on. Conflicts of interest, I wanted to point this out. This form operating agreement allows the members and officers to engage in other interests, and even allows it to compete with the company. Well, you may not want that if two members are going into business to form a restaurant or open a restaurant. You may not want one of those members to go and be able to open a competing restaurant down the street. So pay close attention to what your documents say. These aren't just useless forms. I mean, these documents, this operating agreement has real ramifications for the members of the LLC. And moving right along, confidential information in Article 7, that's obviously the members are going to have access to things like trade secrets and confidential information. Don't release that information. You have a duty to keep that confidential if you're a member or an officer. Meetings of the members, a lot of Article 8, a lot of stuff in here about meetings. This used to be much more important prior to the advent of email and the internet and electronic signatures. Very rarely do small LLCs have formal or official meetings anymore. But if you're going to do that, there's a process for notice and how your meetings are going to go, and special meetings and that kind of stuff. And it's quite extensive, but it's usually not applicable. Most small LLCs do everything by unanimous written consent, which is nice, which is just bang out a document saying what you're agreeing to do and everybody consents. If you do get into some bigger LLCs where you've got multiple members, you're going to want provisions for consents and meetings and all of that customized. And you get in, when you're doing that, you get into a whole nother level of operating agreements and what the real cost of attorney's fees associated with that operating agreement and back and forth. But most things with small LLCs are done by unanimous written consent now. And then we're continuing on. We get into Article 9, which is officers. LLCs, limited liability companies in Texas, can definitely have officers. You can call them the president, you can call them secretary. It doesn't mean that they're members, doesn't mean that they're managers, but you can certainly have officers. Article 10, indemnification. This paragraph basically says that if any of the officers or members are sued for for normal business, trying to benefit the LLC, the company is going to indemnify those members. What does that look like? The company is going to pay for legal fees and defend any actions against those members or officers if those members and officers were truly engaged in furthering the business of the LLC. And keeping it going here. So taxes, we talked a little bit about taxes already and partnership returns. Most of our small business LLCs choose to elect S Corp status, and this is tax elections, tax returns, and this is the operative paragraph. Either the company or a member may make an election to be excluded from subchapter K. That's the partnership section of the Internal Revenue Code. So most LLCs are S corps elections, unless you've got maybe some foreign members, and then a C corp is a common thing. You can keep a partnership default. I mean, there's nothing wrong with a partnership. You need to talk to a tax attorney for more information on that. And if you do keep partnership status, this goes into sort of a partnership representation and things specific to a partnership. 12, books and records, maintenance of the books. Of course, the company's going to maintain the books and the members are able to inspect the books. You can customize this. I mean, if you've got 10 members, you may not want every member going through the books and creating unnecessary expense, or you can have it completely open. Transfers, this is very important. If you have an LLC with a small number of members, you probably don't want the members being able to transfer them to interest to willy-nilly people you don't want to have an interest. And I'll take time to point out that in Texas, you can have an economic interest in an LLC, and you can have a just a governing interest in LLC. So you can be a member without owning any economic rights to the LLC. And this talks about what happens in the event of a transfer, and you can be assigned an economic interest if it's permissible within your LLC documents, and then you can have a process for becoming an actual governing person, a member, and that outlines that process here. And then we keep going. In the event the member desires to sell or any portion of its membership to another person, then you've got these options for what happens. And operating agreements do all different kinds of things, but it's very common that the other members may have a right to buy it, and if those members don't exercise that right, then the company has the right to buy the interest. Very common thing. So read your operating agreement, and this is more about buying out the membership interest. What happens in the event of a marriage, marital relationship termination? Someone gets divorced, and obviously the LLC interest may be considered community property, and therefore the divorce court has jurisdiction over that. So this specifies, well, then what happens? Typically the spouse becomes an assignee. Other members may have a right to buy the spouse out at fair market value, and if the members don't do it, then the company has the option to purchase. That's kind of a common thing. Death of a member. What happens when the member dies? Sort of the same thing. Maybe the other members have a right to buy them out, and if they don't do it, then the company then is obligated to purchase. So know what happens in the event of marriage or death. And I'll also note that you'll see a lot of LLC documents require spouses to consent as well for purposes of community property rights. So talk to an attorney if you've got members with spouses and you've got certain provisions in your operating agreement where it may be necessary to have the spouse sign a community property consent. You do see that pretty typically. Keeping it going. These operating agreements get kind of long, and sometimes they need to be. This one's actually about 30 pages. We've seen big fancy operating agreements be 150, 200 pages, depending upon the complexity. Sometimes that's good, sometimes that's bad. What happens if a member defaults, failure to contribute the initial contribution? There's provisions for that. And then moving along, expulsion. Members can be expelled if they do things like commit fraud. Usually it's a for cause standard. Here you see willfully violated, and if there's an expulsion, what happens to that member's interest? Winding up and termination. I always tell people that if just because you're a member of LLC doesn't mean you just get to withdraw at any time. There's provisions for that. I mean, when does the company get wound up? When can a member withdraw? Liquidation events is all specified in here. How are the assets liquidated? How does that work? The operating agreement specifies all of that. Amendment or modification. This says a supermajority of the members, which is typically over 66.67%, can vote to amend by supermajority. General provisions, and this is kind of the boilerplate stuff about notices, and this is the entire agreement, waiver and consent. You see all this kind of stuff in almost all contracts. Governing law in Texas is almost always Texas. We practice in Texas. And then notices and disclosures. Securities Act, you'll see a disclosure here about securities and how this LLC interest has not been registered. Basic disclosures. We always tell our clients, our firm, we don't practice securities law. That is a special type of law. If you've got clients that are, or if you're someone that's going to be trying to raise public money, or you've got a ton of members, you probably want to talk to a securities attorney in that situation. This is just kind of the boilerplate securities disclosure that's included in most operating agreements. And then all the members sign. Notice that there's not an acknowledgement requirement. I mean, you can have it acknowledged if you want, but it just requires an unacknowledged signature with a date signed. And then Exhibit A is your initial contribution, if there is any initial contribution. Usually there is property or money, and the percentage interest. And in this case, it was a single member example, so it was 100%. You don't have to do percentage interest. You can choose to do an operating agreement that expresses the ownership by units. That sort of mirrors a shareholder situation. It doesn't really mean that they're share certificates. Remember, all LLCs in Texas are nice because they lack a lot of formality that corporations have, and everything about an LLC arises out of contract. So that's nice, as opposed to a corporation which has personal property share certificates. And then finally, I point out it's actually not a legal requirement to have an operating agreement for an LLC in Texas, but it's a really good practice to have one. So I recommend all of the LLCs do have an operating agreement. Really bad idea to not have an operating agreement if you're a multiple member LLC. So that concludes our review and analysis of a standard operating agreement for an LLC in Texas. Hope you found the video educational. As always, if so, remember to like and subscribe, and thanks for watching.